Let's talk about autos. It's the first day of the month. We've already heard from Maruti. It's been a disappointing number that you've seen from Maruti, but what can we expect from Motan at large? Mayur Milak from India Nivesh Securities and Hormad Sorabjee, editor at Autocar India, both join in to highlight the trends. Mayur, if I could start off with you first. A disappointing number from Maruti is what we've seen. Do you think that's pretty much the large trend that we're going to hear other PVs as well deliver for October?
Yeah, so I think yes, definitely disappointing. We were expecting sales to be in the range of about 1,60,000 odd. They've delivered flattish performance. At one point, while I believe it is bad, it is also good that that they've not really piped in the inventory at large, and which means that we shouldn't really expect a huge production cut going forward. I think they've already taken care of the channel inventory. So in that way, it is pretty good.
Hormaz, hi, morning. What are you hearing from your channel checks? Does it seem like because of the market situation, the rising interest rate scenario, people are a little circumspect and only pushing buying new cars or bikes or whatever have you to maybe a little later?
Well, there are a couple of factors. Firstly, one must remember that the base now is really pretty high in any case. If you look what happened last year, after post GST, I mean the kind of growth we had was tremendous. So to expect that sort of growth or continuation of that is going to be difficult. In addition to that, yes, the market sentiment is down. Fuel prices are going up. The rupee depreciation, and I think even insurance, which has been a huge hit because that's really pushed the cost of vehicles up, especially on two-wheelers. I mean, insurance was accounting for 10% of the cost of the two-wheeler. So because you have to pay upfront 5 years, that sort of thing. So I think all these factors have really compounded the slowdown or the weak demand. And I think clearly also it's partly to do with some sort of a correction. And don't forget, we did have a very high base, and all these factors are going to be a speed breaker for that continuation of growth.
Do you see a follow-up investment coming in the space right now, Hormaz, or do you think that there could be a bit of a roadblock in terms, so they would want to run at full capacity for the capacities that they own, but there would not be additional investment?
No, I think investments is taken with a much longer term view. Obviously, there is still a lot of upside, and don't forget, potential is still there. But I think investment isn't driven really only by the growth of the market. It's driven by the landscape, the regulatory landscape, whether you can, how profitably you can make cars over here. And very clearly, it is very difficult for anyone to enter this market despite the potential, clearly because it's a very low margin business in India. The automotive industry, probably the lowest in the world, and you've got a company like Maruti which has locked out half the market, and very difficult to kind of penetrate Fortress Maruti. So I don't see too much investment coming in. Everyone's just taking a bit of a break. Volkswagen Group have announced $1 billion, but that we'll see how that pans out in the coming years. But the big players, whether it's Ford now is not going to invest on their own. They've tied up with Mahindra to share cost of development. Honda, yes, they're going to be investing in the coming years to be present here. Toyota also not investing to a great extent. So I think other than Maruti and Hyundai, which have the stakes are quite high in the Indian market, I think everyone else I think would be on pause, because we have to see what's happening globally also. I mean, the resource now required to pursue different kinds of technologies in this very disruptive landscape of autonomous, electric, you have to continue with your current IC engines. It's making companies focus on markets where they are making money rather than on those where they are losing money.
Fair point. Milak, if I could come to you and get your view on what exactly are you expecting from the commercial vehicle end of the market? And this would stand true for an Escorts or Tata Motors for that matter. And I'm not going close to Tata Motors earnings and what the management did thereafter. I'll talk about it in just a bit. But what trends do you expect to hear from the rural side of the business of auto majors. And do you sense that oil prices, rising interest rates are bound to take a hit for that segment too?
So I think, commercial vehicle probably is the only side of the auto pack right now which, seems positive to us. We've been saying that, demand has been steady. Even if interest is riding, as long as the logistics make money for themselves, I'm sure things are going good in their place. So we believe that at least the commercial vehicles, both the medium and heavy and LCVs, are doing phenomenally well, and we expect them to do good going forward as well. On the other side, as far as two-wheelers go, as far as passenger vehicles go, yes, we believe a slowdown is definitely in the making.
Okay, and so what would be your pecking order? I mean, how would you look at finding value within the CV space at this juncture?
So at this point, we officially do not have a coverage on either Ashok Leyland or Tata Motors. But I think valuation wise, I would definitely believe Ashok Leyland looks a good buy.
Almost, I recall in all our conversations over the last 1 year and talking about Tata Motors here in particular, you've always said that Tata Motors doesn't have a game plan ready. They don't know what their product pipeline is going to look like for the next beyond 2 years. And I guess that's becoming very evident and clear to the market as well right now, irrespective of Chandra saying that there is a revival plan which is in the works. We know all that the stock has done. It's beleaguered. It's the most disappointing stories on D Street. Hasn't participated in any of the market rallies, cooling off only further right now. We saw that huge loss that they posted just yesterday. Do you think this is now turning out to be a clear avoid, if not already, or do you think that there would perhaps be merit in giving them that benefit of doubt that Chandra perhaps would have a game plan and maybe we could see a revival coming in for Tata Motors?
No, I think, just to clarify, I think, it's after 2022 where probably there is no real new product pipeline on the horizon. But right now, I think actually Tata Motors has seen a renaissance. And actually, I'd said this a couple of years back on this show that, they had a fantastic product pipeline. But that's being played out right now. So we've had they've just showcased the Harrier where on social media it's just gone through the roof. And they've got another hatchback on that, and maybe they have let's say a small compact SUV. So there is a product pipeline being developed, but one doesn't have clarity on it. Obviously, the big bets are going to be electrification. It's going to be continue with your current technologies. So the point is, there's going to be a massive stretch on resource, which for a company like Tata Motors is a big challenge. But in fairness, I think right now it's actually flipped. When Jaguar is struggling, Tata Motors has actually done well. I think this has really been their best year and on a lot of fronts in terms of sales, market shares, even in terms of margins, they've been much better off. So they've really turned things around. The question is, can they sustain it? That's really going to be the challenge, especially when you move to new technologies. And frankly, I think they need to collaborate, just the way Mahindra has collaborated with Ford. You can't afford these new technologies on your own. You have to be having partners on board to share the humongous costs that are required. Coming to Jaguar Land Rover, I think their exposure to China is become now very evident because they were riding high when China was doing well, but now sales have tanked in China. I mean, the whole luxury car market has gone from 27% growth to just 2% growth, and they're caught in that in that sort of situation. I think the diesel issue, again, they've been very exposed to diesel, and of course the whole Brexit issue. So I think it's really a tough time for Jaguar Land Rover. Some of it beyond their control, but again, the company is small. They only make around 600,000 cars a year. The scale is small, and everyone needs money, and most of it has to be generated from within to kind of invest in the future technologies. So I think that's going forward is just the whole landscape of how it's going to pan out in the automotive industry. No one really knows which way it's really going. Everyone's betting a lot on electric on one side, but again, that's not picking up the way it should. So very difficult times for the auto industry going forward, and it's really the toughest who are going to sustain.
Yes, indeed. Survival of the fittest. Thanks very much, Hormuz, for joining in.